All right, fantastic. Well, hey traders, welcome to the session. We've got a lot to talk about today. In fact, I've got a lot to talk about in a little bit of time, and that's okay. That's all on me. So let's go ahead and talk about the subject here is about really trying to establish what the markets are really trying to tell us, about to understand what the markets are really telling us based on technical analysis, but using certain styles of trading to be able to do what I like to call bread and butter trades. Why is bread and butter trades important? All right. Now, as a fund manager, it's very important to know, and again, you could be managing your own trading account, and so you're a fund manager of your own trading account. So whether you're trading for other people, whether you're trading for yourself, it doesn't really matter. You should have this sort of approach in your trading at all times, where you look at the markets or you look at your portfolio as it's going to be broken down into two segments. The one segment is, of course, bread and butter trades that I keep talking about, and the other segment would be, of course, some long-term trades, some bonus trades. All right, so you want to get these bonus trades paid out once a month, but you're focusing more on the bread and butter trades. You see, when you're trading, what's really important is the growth of your trading to show, or your account balance to show growth on a daily basis. In fact, as a trader, that's one thing that really motivates us as a trader, is when we come into the trading table each and every day and we see profits being generated on a day-to-day basis. And the reason why you want to see that is that it's very motivating for a trader to be able to, and encouraging for a trader to be able to come in, notice that their balance is growing, but focusing in on the bigger trades, and that they don't have to worry about the expenses, the day-to-day expenses being covered, because that's what the bread and butter trades are doing. So we're talking about bread and butter trades. So let me define what bread and butter trades are. Bread and butter trades are trades that are done in short-term time frames, that you're constantly in the market. I like to call it always in the market. You're always in the market. It's not type of setup that you go ahead and you place a trade and you get out of the trade, and now you take 3 or 4 days, maybe a week, to find another good trade setup and then go ahead and get into that trade. That's more bonus trades. Your bread and butter trades is placing trades on a day-to-day basis. Now, I'm going to give an example of that, and I'm going to see if I've actually got a great example right here. Let me pull up this right here. This would be a good example, and I'm going to show you some results just because I want to make sure that everyone understands what I'm trying to get at. So you take a look right here on this trading account right here. We've shown about 531% over the last year, and it's actually a year and 1, 2, 3, 4, 5, 6 months. So a year and a half. So we started in 2021. In 2022, we're now up around about 147% for the year. Let me see here. No, 150 for the year, 150% for the year. And these are based off bread and butter trades. These are trading after 20 pips out of the market. That's what it is. Just 20 pips out of the market. So we get into the market, we look for 20 pips, we get out of the market, and we trade multiple currency pairs, and we're constantly placing trades. Now, how many trades are we placing per month? Well, if you take a look over here, our trades being placed a month, this month alone, and we're not even done yet, we've placed 181 trades. So if you take that over a period of, let's say, how many days of we're on 22nd, the 22nd, take about 6 days off that, we placed about 15 days of trading. So if you take the 181 trades and you divide that, let's say, by 15, just give or take a few, you're looking at 12 trades a day, right? So 12 trades. Now that's a lot of trading, all right? Now you don't have to get as so active in your trading, but you've at least got to place quite a few trades. So that's your bread and butter trades. And so by placing your bread and butter trades, all you're doing is you're just building up your equity every single day. You 136 pips for the day, 240 for the week, 1,700 for the month. Every day you're just building up your trading account. Now, what's important is, even though you have those bread and butter trades, of course, it's important to place these position trading trades, these long-term trades, these trades that are placed on a 4-hour and an 8-hour time frame. And what you're doing right there is you're trying to keep yourself from being in front of the computer for too long, but finding these good trade setups. I'm going to look for a couple of trade setups right now. I'm going to show you exactly what I'm talking about when I look for these position type trades. I'm also going to stick around. I will be done before the hour, but what I will also show you is exactly how we pick up these 20 pip trade opportunities as well. So that you can also go ahead and look at these two scenarios where you're going ahead and you're creating these quick trade opportunities on a day-to-day basis, but at the same time, you've got these long-term trades that are keeping your account built up with these big profit targets. And so let's go firstly to the long-term trades, and then I'm going to go back into the short-term 20 pips a day, or sorry, 20 pips per trade type of setups. And I'm going to explain to you exactly what we do, and I'm going to give you some information that you can take with you, and you can go ahead and take a look at it yourself, make decisions whether or not that's something that you'll be interested in as well. All right. So with that being said, let's jump into the long-term trades first. And so if I look over here on the long-term trades, I'm going to tell you right now, JPY crosses. A lot of you are saying JPY crosses are still on a rally. I'm going to say right now that there's a turning point coming on the JPYs, and we may be there right now. So the JPY crosses that we've seen over the last 3 months, just absolutely blowing itself out of the park. We're now going to see that, and I'm not saying I'm trying to pick the turning points, but I'm definitely looking for those turning points because I'm already starting to get into positions on JPYs and selling them short. So let's see if I've got this right. So let's go take a look at a couple of examples here. So firstly, number one, you'll notice down below here, I've got an indicator called the power corner. It gives me, and just so that everyone understands what this is, that power corner indicator down below is an indicator that can tell me whether or not there's sellers coming into the market or whether there's buyers come to the market. So when you look down below right here and you see a blue color down below in the power corner indicator, that's indicating that buyers are getting into the market. They are, let's put it this way, buyers are getting prepared to get into the market. All right, so they're preparing to get into the market. When it's red, it's telling us that sellers are getting prepared to get into the market. When it goes green, it means that we've got buyers and sellers in the market at that time. So when you look over here, and I'm going to go to the larger time frame first. So I like to, as a trader, I like to identify what the markets are telling me based on market cycles. So the first thing I do is when I go ahead and look at the power corner on this chart right here, and I look at this right here and I say, hey, I've got a red bar down below. The power corner is telling me that there are sellers coming into the market, right? Or at least preparing to come into the market. What I do is I go ahead and go back to my technicals and I go say, well, does it make sense for me to start thinking bearish right now on the US dollar JPY? So, and by the way, this is the US dollar JPY chart. So if we go to the daily again, when I'm looking here at the daily time frame, is I'm establishing what are my market cycles telling me. And so far, looking at this setup right here, I'm saying to myself, does it make sense for me to start looking for a sell-off if the patterns or the cycle is at its end? So let's do this. Here we can see that we have wave one. So price goes in, creates wave one. Then we have a wave two. Price goes up to wave three. We have four, and then we go up to five right here. Now, the one thing I can establish right here that we had a very shallow wave four pullback, which means that the market may fail to go to the fifth wave and actually turn around and head back down to a deeper fourth wave before going back up north. So there is this chance that the market might be indicating that we're going to see a sell-off. And so what this tells me is that I'm seeing a little bit of negative divergence here, which means that price is moving higher and the oscillator is moving lower. So we're seeing negative divergence. That's the first sign that there's a possible turnaround coming. All right. So that's a good sign. The other sign, of course, is that we did come off a very shallow retracement right here of the fourth wave. And because we came off a very shallow retracement, it tells me that price, if it's going to come down, if I get the signs that it's going to come down, that we could go all the way back down. And this is important for long-term traders, right? For those bonus trades, those month-to-month bonus trades. When I look at this, I'm seeing the opportunity, and I'm seeing that if we go down to that low again, we're looking at about a 996, call it 1,000 pip move. That's 1,000 pip move back down south. That's a great opportunity. Now, we may not be able to grab the 4,000 pips, but we can certainly grab some trades going down in a sort of a wave pattern. So what's going to happen is the market's going to start creating on the lower time frames. It's going to start creating these wave cycles going down, and we're going to be able to sell on those pullbacks, right? Sell on those rallies and chase after the target down here. So what have I done here so far? So far, I've gone ahead and I've seen on my 8-hour time frame, I looked at the power corner indicator. And the power corner indicator has indicated that price is going to look to sell. We've seen that sellers are starting to get into the market. That's a great indication. But then what I've done is I've gone to my technicals on the daily time frame right here. We've got some good setups based on turning points and wave structure. And I've established that, hey, this makes sense. This makes absolutely sense. Because why? Because right here, we see that the market has not got to the fifth wave. And if we start moving back down, it's going to go ahead and take out that fourth wave, which gives us a 1,000 pip opportunity. So now what I'm going to start doing is I'm going to start paying a little bit more attention to what's happening on the power corner indicator. So on the power corner indicator right here, we can see right here that we've got something brewing here. Something's working to sell. Now, if I go ahead and take away all the indicators right here and objects on the chart, if I look over here, I can see that we have a setup right here that's starting to work its way. We don't have a red candle yet, so I haven't got the actual entry yet. The entry is when it turns from blue to red. Now, what I can do is I can go to a 4-hour time frame as well. And on the 4-hour time frame, notice that we got red bar below here. We don't have a red candle, so even the 4 hours not giving me the indication yet. If I go to the 1 hour and I look at the 1 hour, the 1 hour's already said it's time to start selling. So we know that the 1 hour, 4 hour, and the 8 hour are good time frames to trade. But we also know that if you're looking for an early setup, going down to the 1 hour compared to the 8 hour is going to be a much earlier entry point, right? You're going to get an early entry point. But I know that even though it's an earlier entry point, okay, that I might have to go ahead and place tighter stops to protect those positions. Now, there's different ways to be able to protect your trades and protect your positions. And then we're not going to speak about that today. But what I want to do is just give you the high level view and the concept of, hey, this is how I look at the markets and this is how I look for those bonus trades. And so because I'm looking at a 4 hour or 8 hour time frame, I can be a little bit more patient with the market. And so I don't have to be in trades every single day, because the biggest problem with traders is we become impatient. And we become impatient because we're constantly looking for profits every day. We have to build up profits. We've got bills to pay. We've got these to pay. And we have to start making trades. And if you lose on a trade, guess what happens? Then you've got to make up that losing trade and make some in order to be able to reach your goals at the end of the month. And so it becomes, you start becoming a lot more pressurized to find trades. And that's why the bread and butter trades keeps a trader knowing that he's got his expenses paid, and these bonus trades is nothing he needs to rush into. He can slowly take his time, wait for the trade to come to him instead of him running after the trade or trying to create something that's not there. So it's important. So already on the US dollar JPY rate here, we've got a sell-off. It's already selling off. Now we can say that we want to be a little bit more conservative, all right? And I call these different time frames being aggressive on the 1 hour, being moderate on the 4 hour, and being really conservative on the 8 hour. And that's because the entries that we get are going to be a lot smoother on the 8 hour compared to a 1 hour. And a 1 hour, you probably have to spend a little bit more time on the chart, because you have to identify, or at least not on the chart, but monitoring your trades, because it comes so quickly and you've got to monitor the setups. So here we have setups. Now, take a look right here, just as an example, all right? Just to give you a bit of the confidence level that I'm looking at right here. When I see a blue candle right here, blue bar down here below, and it turns around and goes from red to blue right here, it's a good time to start buying the market. Now, especially if you've gone ahead and analyzed the market on the larger time frame, and you've established that there is a support level there, and you're looking for price to move up. And so you can get in on that when you get the signal, and you can take that ride all the way to where you anticipate the market to move to, okay? Whatever that level is based on your technical analysis. Now, If we go ahead and we take a look right here, I'm going to go to another example. And this again, this is JPY cross. And I want to show you another example of a JPY cross. I'm going to go to the 8 hour and I'm going to go to Euro JPY. Take a look right here. Euro JPY has not taken out the previous high. This means that we've got a nice little swing. Oh, I actually put it in there already. Nice little swing down right here. We set a sell zones right here. It's gone a little bit higher. As soon as we get a red candle, it's time to go ahead and sell. We've got a red bar down below. It's a good place to go ahead and start selling. Now, you see how we get in different time frames, or sorry, not time frames, but different currency pairs, almost explaining or illustrating the same sort of direction for the JPY crosses. And that's why I say JPY crosses are on their way down. Let's go to the pound JPY. Pound JPY right here, the same thing. Look at this. We've got a downward swing. We've got bars down here that are red. It's indicating that we've got a red bar here. Time to start selling the pound JPY. Now, if you want to go to the bigger picture, you can actually identify and say, all right, if I'm looking at the daily right here, if the pound JPY is going to sell off, where's it going to go? We always have to know that, right? And so if you look at the wave structure right here, we've got wave 1, 2, 3, 4, and 5. And because we're at the 5th wave right here, now we're looking for price to move back down to the 4th wave. And so this opportunity, once we start selling on the pound JPY, we can see the pound JPY dropping about 1,750 pips. Are we going to grab all 1,750 pips? Probably not. But what we're definitely going to be doing is going to be picking up these ups and downs, selling on the rallies, going down towards the target where we now anticipate price to go ahead and turn. And that'll be right here as market takes out the 4th wave. So we'll be seeing the price moving down, working its way down. Maybe this trend line going down right here is going to be support for it. But once it gets there, it's going to then go ahead and start moving back up again. So again, identifying turning points in the market are based on larger time frames, but establishing when it's time to buy and sell based on using your 4-hour, 8-hour, or your 1-hour time frame, depending, of course, whether you've been aggressive, conservative, or moderate in your trading. That's the time frames you'll be choosing. Okay. Then anything below a 1-hour time frame, whether you're trading on a 15-minute time frame, whether you're trading on a 5-minute time frame, whether you're trading on a 10-minute time frame, if it's a different time, a different chart, it doesn't really matter. Those will be called my bread and butter trades. All right. So the bread and butter trades are real interesting. Okay. Bread and butter trades are based on support and resistance. Buying support, selling resistance. That's really what it is. So if anyone asks you, what do you do for a living? You buy support and you sell resistance. And you use that in the currency market, in the forex market, right? It could be stocks, options, whatever it is that you do, even cryptos. Now, the thing here is chasing after short-term profits is essential. Now, when I first started 27 years ago, I started as a scalper. And I did that specifically because it was hard for me to stay in the market for a short period of time, for a long period of time, because I get very anxious, all right? Because I was always trying to question myself, question my trade. Did I do the right thing? Did I get in the right price? Is the market going to go? Is the news coming out? Did I miss something? Is there something that I'm seeing that I'm not identifying as a problem? You know, those things start kicking in as soon as you start moving into profit, or if the market goes against you. You're always at the edge of your seat, wondering whether or not this could go wrong, and especially as a new trader. And so it got to me a point where I just couldn't bear it anymore to stay in the trade for too long, and I didn't trust it enough. I didn't trust my ability to be able to identify whether I had made the right decision, and so I kept on taking profits early. So I realized then that I guess that's the way I'm going to be trading, is just taking profits early, you know, just getting in and out of the market, which turned out to be I was a scalper, all right? Scalping the market, just looking for some quick profits in the market and getting in and out of the market right there. Now, I didn't really have a good strategy on how to trade the markets and profit out of the markets so that I can add more positions to that trade and not over leverage myself and end up blowing up my trading account. Now, they always say that great traders blow the account up at least once in their trading career. I did that a few times, so I guess I must be a fantastic trader. All right. Now, the thing is this: when you're looking at trading and you're identifying trading opportunities based on these bread and butter trades, like I said, we look for support and resistance as an option to trade. Now let's talk about support and resistance. What is that? Well, support and resistance could be based on horizontal lines. It could be based on trend lines. It could be based on channel lines. It could be based on Fibonacci levels, highs and lows. There's a whole bunch of ways to identify some support and resistance, right? There's a lot of ways to identify that. So which means that if I go ahead and I bring up let's go down to a lower time frame, and I bring up a lower time frame right here, we would be able to find a lot of support and resistance levels on this lower time frame. I'm going to move to let's say I'm actually going to pull up a chart right here. I'm actually going to place a trade as well. So let me just take a look and see what am I not in here, and I'll let you know exactly how this is going to play out. So oh, here's a good example. So there would be one right here, and I've got two trades I could probably go ahead and place right now, and they're both going to be a buy on either the New Zealand CAD or the Aussie CAD. I'm going to go ahead and explain exactly how we enter this trade. So let's go into let's go to Aussie CAD first. Place it on Aussie CAD. So Aussie CAD, and I'm going to move this out of the way. I don't need any indicators right here. I just need price action. All right. So what I'm going to do here on this chart, and I'm going to go down to let's go down to a 15-minute chart. Let's get lower down here. Okay. So what I'm going to do here is on this chart, if I look at this pair right here and identify what I'm currently seeing, that's all I really want to look for, is what I'm currently seeing. Well, currently right now, I'm looking at the markets and I'm seeing that there are levels of support and resistance based on channel lines. Okay. So the market's definitely being channeled. And so what I see here, that here at the top here, the market created these swings going down right here. Then we had a very strong pullback, and then the market started selling off again. And so what this creates is a market cycle. This is telling me we've got a wave one, wave two right here. This is wave three. Wave four is what it's looking for, and it could come back to retest wave one right here. And then it's going to go down to wave five. It's going to create a wave five. So how I look at this is this. I'm not trying to be the best person to find the best entry point and make money on each entry that I enter straight away, which means that traders, I'm willing to go ahead and say that I'm willing to manage my risk so that it allows me to go in with multiple entry points. But I want to be confident enough that if I start entering with multiple levels, that I know and believe that the market's going to turn around and head back if I'm wrong the first or second or third or fourth time. Meaning this, if I choose to enter the market long here, I want to look and say, how far apart am I going to go into the market, all right, and level in? And how far do I expect the market to go if I'm wrong? Because remember, traders, there's always an alternative, right? The alternative is when you're wrong. So being an instructor or being an analyst and talking about the market, you can almost not be wrong, because what you're saying is, hey, I'm going to do this if the market does that. But if it doesn't do this, I'm going to do this, which means that either you're buying or you're selling, right? I mean, I'm going to be right both ways. But what I'm going to do here is I want to do that same thing. I'm going to apply the same concept here. So when I look for my bread and butter trades, what I'm doing here is I'm looking to trade short-term swings. Now I see there's a wave structure in play here. I'm going to go ahead and I'm going to go ahead and use Fibonacci and see if Fibonacci is going to confirm my support and resistance level. So I'm going to do this. I'm going to go ahead and put some fibs in from the top right here. I'm going to go right down to the bottom right here. Okay. Now I notice that we have a good support level right here. So this is going to be support right here. Now the market's already bounced off that level. But this is the thing. I'm going to go ahead and label this. I'm going to label this my wave 1, 2. This is 3 right here, so which means I'm looking for a 4 and a 5 right there. Now what I'm going to do is I'm going to go ahead and put some fibs in on the last 2 to 3 wave right here. Okay. Now this I'll probably do beforehand, just so I've got the information before I place my trade. So I know that we're in this wave structure right here. So we're in this wave structure. So there's this thing. The market right here, is either going to go ahead and do this, right? and then start selling off right there down to around about 1127. So I know there's going to be range bound. You know why I know that? Because this is a fourth wave. A fourth wave is the more complicated wave because it's mostly range bound. And range bound conditions will normally have an internal structure, which is a 3-3-5 structure. I mean, 3 waves up, 3 waves down, and then it's five waves up, and then it ends up going out and breaking out of that structure. So we know that. So because I know that, and I know that's going to happen, I feel confident to say that I want to go ahead and buy. I want to go ahead and buy the Aussie CAD right here. And so I want to buy it because I believe that the market's going to do this. Here's that 1 wave, 2 wave, 3 wave, and then it's going to be 1, 2, 3. And so right here, I think it's going to go 1, 2, 3, 4, 5 up here. So we're going to go ahead and see price moving back up. And it may go back and retest this level and then start going north. So I'm going to say this, that I'm going to put another fib here just to see where that angle is. All right, so we could go low there, not expected. But if I start buying here, right here with price at right now, and I level in, I should be able to hold at this support. So what's going to happen is I'm only going to look for 20 pips in the market. So guess what? If I enter here and I enter with a 25 pip gap between, 25 pip gap between, and I constantly do that, I enter and I gap at 25 pips apart. With this belief and understanding that price is going to move back up. Guess what? If I'm wrong here at the first entry and it goes down to the second entry and I enter there at the second entry, if it goes back up to the first entry, guess what? I'm going to be 20 pips in the profit. So if it enters both those entry points, I'm going to be entering 1, then entry 2, and I'm looking for 20 pips. By the time it gets to the first entry point, guess what? I'm 20 pips in the profit. I can close out and take my trade. All right. And so I'm going to do that. So right here, I'm going to enter the market with a buy. So I'll go ahead and say, all right, let's go ahead and place a buy. Place a buy right here. I'm not going to put a stop loss. I'm going to manage my position based on entry points. So I'm going to go ahead and manage it, but I do want to put a limit on. So I'm going to put a limit right here. I'm going to call that limit 20 pips right there, 20 pips there. Okay. And I'm going to go ahead and close that position. So now I'm in here on a long. I'm looking for a 20 pip target, and that's it. When the market gets there, I'm going to cash out. But this is my backup. My backup is going to be this. All right. And let's see here. My backup is going to be that if the market moves further down south. All right, I want to put a 20 pips here. I didn't move. Do this 20 pips. All right. Now, if the market moves further down south, I want to be able to get in multiple positions. So what I'll do here is I'll go ahead and enter 20 pips below that, which will be around about here. Right there. So at 89.34. So 89.34, I'll enter there. So there was 20 pips. I want to go 25 pips. I want to go another 5 pips below that. So it'll be 29. There we go, 29. All right, so that's 20. So this is 25 pips below. So if the market goes further, I'll get down here. I'm going to enter again at 25 pips lower. If the market goes lower than that, then I'm going to go in and enter again, and that'll be at 89.04 right here. So 89.04, which will be right about here. There we go. So now if I go ahead and compress the charts right here, you can see a little bit of a bigger picture. You can see right here. So this is my game plan. My game plan is that, hey, if I'm wrong here and price decides to go down, if it bounces off this level, then comes back up, I'm going to be able to profit 20 pips. If the market doesn't do that and does this and goes all the way down to here, picks up 1, 2, 3 entries, and then goes slightly above the first entry, I'm going to be a net 20 pip profit there as well. And I'm going to be able to capture profit there. Now, traders, again, if you're asking me, Gary, does this really work? Does this really work? Have you done well with this? Have you profited? Yes. We've done over 150% doing exactly this. 150% for the year. We've done over 500% since we started, 531% since we started in January 1st, 2021. So does it work? Yes, it does. Okay, it does work. Now, let's go back to this trade. So we've got this trade right here on the Aussie CAD. Now, I've got a few minutes left, so let's go ahead and take a look at the New Zealand CAD. Another trade opportunity, similar concept, all right? Another trade opportunity on the New Zealand CAD. So I'm buying for 20 pips in the market right here. I'm going to be buying 20 pips in the market, and then once it goes up, we're going to go ahead and take a profit now. I'm going to go to the New Zealand CAD right here, and the New Zealand CAD is offering a great opportunity here as well. All right, let's go ahead and clean up house. I'm going to go ahead and take all the charts off here. There we go. And so now I'm looking at this and I'm saying, hey, listen here, traders, just the fact that the market's gone this far down and we see that price is struggling right about here, right, at the previous levels right here, I believe that we're going to see price wanting to go back up and retest this level right here at the top. So what are we going to do? And again, supply and demand levels is also a form of support and resistance. Okay. So if we go over here and we take a look at this setup right here, I'm going to go ahead and say that price has just gone ahead and retraced back towards this level of support right here. Okay. And so because it's pulled back and it's come back to this level of support right here, I believe that we are going to see a rally. Okay. So on the New Zealand CAD, I'm going to look for a 20 pip move on this. So what I'm going to do is this. I'm going to enter the market with a buy. Enter the market with a buy. I'm going to go ahead and just put a 20 pip limit on that. I'm going to go ahead and buy it. There it is there. Now, again, same thing would apply. If the market's going to go down lower, right, then what I will go ahead and do is place in another entry point right about here. So this is where we entered. So that's 25. So around about 81 is going to be my next entry point right here, right there, 81 flat. That'll be my next entry point to go long. If the market does go ahead and want to test this level, and some traders would go ahead and say, hey, big dog, I'm going to enter there and I'm going to put my stop loss right here. Well, what could happen is the market's going to go down, stop you out, and come back up, and we would be making profit. You'd be stopped out, and you'd be saying, well, the broker's checking up on stop losses, right? I mean, that's the common thing, all right? Someone's watching my trades. So we're going to do that, and then we're going to do this as well. We're going to enter another entry point lower than this. So that's it. So we're going to get 75 right here, 80.75. That'll be our next entry point right there. So we're looking at multiple entry points. Now we could go in with multiple entry points until the market moves back to our entry point. But what we do is we keep an eye on the larger time frames to making sure that the levels that we're looking at are indeed the turning points that we anticipate in price to move. Okay. So this is the deal. For those that like and or at least want to and have not already want to go ahead and start getting into more of a sort of a professional outlook on their own trading portfolio and want to be able to manage the account better and are looking for that bread and butter trades, well, you want to go ahead and check out the YouTube channel FX Big Dog, right? Go ahead and search FX Big Dog. Check it out. What we also have, if you go to our website, Traders Network Club. Now, why am I referring you to our YouTube channel? We do live videos on a Tuesday, Wednesday, and a Thursday. In fact, tomorrow will be another session at around about 9:30. And what we do is we actually go into the live session and we actually place those trades. So go to two YouTube channels, FX Big Dog, as well as search Traders Network Club. All right, Traders Network Club. Now go to those two YouTube channels, subscribe to the channel, and you'll see that we'll go live at 9:30 tomorrow morning. We do that on Tuesday, Wednesday, and Thursday. And what we do, we actually go ahead and place live trades in the live environment, and we do exactly that. We look for support and resistance levels. We enter the market. We show you exactly the trades. And what we also have is a Telegram channel that you can actually connect to for free, where we actually place all our trades that go into the Telegram channel, and they post it at the same time we enter the trade. So you can monitor and see that we're actually placing these trades live. We've got a live trading account. We're placing these trades, and we share those with you. We share those entry points and those currency pairs with you, so you can follow along if you choose to. Now, if you go to our website, tradersnetworkclub.com, you'll see on our website we have 3 membership options. The first one is called the starter membership. All right, check that out as a starter. It's $27 for a 14-day trial. You can get all the tools and everything that you need in order. If you don't like it, no problemo. But what we will do for you for that $27, you'll get the tool you can use to trade these support and resistance levels. But what we'll also do is we will send you trade signals that we're placing based on that trading account that I showed you right now. We'll send you these trade signals that, as you can see right here, 181 trades that have been placed in just this month alone. And what you can do is you can use that trading tool to be able to, as soon as you get the signal, and if we tell you to buy New Zealand CAD, all you got to do is push the buy or sell button on that particular currency pair, and it will go ahead and manage the position for you. It'll enter the trades the way it should be. It will manage that, and when it gets into this 20% profit, it'll go ahead and close out the trade for you. All right, and those trades are being not only shown in our YouTube channel, but those trades are actually additional trades that we're going to be sharing with you. So not only can you get live trades in the actual YouTube sessions we do, but you can also get those the additional trades, 181 trades that have been done this month, and we will share those trades. In fact, we placed 1,323 trades here in the last 6 months. All right, last 6 months, 1,300 trades that you're going to get as part of that option. Check it out. It's called the starter membership. It's $27 for the first 14 days. Check it out, and then it goes to $67. But check it out. It is absolutely $47. It's absolutely an awesome deal. And again, it'll be able to give you those bread and butter trades so that you can build up your account on the sideline while you're building up sort of a good portfolio on your larger midterm type of trade setups. All right. My name is Gary Fichardt. Many know me as the FX Big Dog, and I appreciate being here. I appreciate you guys being here, and hopefully we'll see you guys in the live sessions. Thank you very much.